So a lot of you guys have asked me before, how can I improve in trading or how can I improve my strategy? And I always ask the same question, do you have a trading journal? And the answer is usually no. And the reason I ask this is because anyone that does have a trading journal basically has a cheat sheet into seeing exactly where their strengths and weaknesses are and how to optimize and improve their strategy to create the perfect strategy for themselves. And it's easy to say you should have a trading journal, but I think the part that most traders struggle with is how to actually create a trading journal. So if you're struggling with ideas of what to include or what you actually need to track in your trading journal, then I'm going to explain all the essentials that you should be including in your trading journal. So as a little disclaimer, I will mention that a trading journal is personal. At the end of the day, we have different strategies, we have different lifestyles, so different elements are going to be important to us. So someone who is working full-time or raising kids will have to be more cautious of which sessions their trades are appearing in. So when you're creating your journal, focus on the things that are most important to you specifically. And hand in hand with that, the second key rule to remember is to keep it simple. Only include the essentials. Because if you're giving yourself too many things to track, what's going to happen is after your trade, you're going to feel more reluctant to actually fill in your journal. So if you keep it simple, it'll be easier for you and more likely that you will actually do your journal after every trade or every day. And that way you can maintain the consistency. So with that out the way, let's dive into the juicy stuff. So of course in your trade journal, it's mainly going to be focused around your trades and the setups that you're taking. So after every trade that you take, and this could be back tested or a live trade by the way, the journal works exactly the same. You're going to write down what pair you've traded, what date you've taken the trade, and this is the key part, the reason for your entry. So this is the part where you want to create a checklist for yourself, a list of rules that you need to follow on every single setup that you take, and hopefully when you do your journal, you're going to be able to tick off all those points. This is what creates your trading system. If you're doing random things on each trade, then you don't have a system and you're simply gambling. You're taking a risk in the market and hoping for a result. Even if you think there's logic behind it, there's no consistency behind what you're doing, so therefore it's gambling. So this is really the most important part of your trading journal. Have a checklist for your strategy, a list of rules that you need to follow for every single trade. And finally, it's a good idea to include a screenshot of your trade. The more you can document, the better. So doing a screenshot before the trade with your analysis, if you can show the checklist in a visual way, it's a good thing to keep record of. Then it's a nice idea to do a screenshot after the trade. This will be good in later stages when you're evaluating your performance and you can just easily go back and see how the trade usually moves in terms of price action and movement. Is it impulsive? Do you get a lot of consolidation with your strategy? Those sort of things are easier to spot when you have a visual representation of your chart. So it's not just about data, it's a good idea to sort of document the visuals of your strategy as well. So that's why I recommend having a digital journal because it makes this easier. For example, if you use Notion or you just want to keep things simple, you can just use Google Docs or something and copy and paste from TradingView and put it in there. But yeah, if you want a physical journal, you can get a mini printer or something and you can print out your charts as well. But I highly recommend keeping screenshots of your charts. Now, the next section in our journal is the entry and executions. So this is way more data-based and basically you're going to record the time of your entry. So this is mainly focused on which session that you're trading, and it's good to just be specific and say what time you've entered because right now you're in the data collection phase, but always remember the whole reason you're collecting data is that eventually you'll have enough where you can start evaluating and optimizing your strategy. So for example, if you see that most of your setups are playing out during New York, maybe you can enjoy your mornings and plan to do something else during your mornings because you know that there are less trades during London session and you can just get more stuff done and out the way and focus on trading during New York. So it's good to collect data around the entry and, if you want, even the exit times of your trades, because this will tell you the average duration of your trades, so you can have more confidence also in whether you should be holding your trades overnight or over the weekend, or if they're going to be day trades or swing trades. So these are good data points to collect. Now, the second thing you want to know is, did you follow your plan? So this is different from your checklist because that is just based on your criteria to enter a trade. But your trading plan includes your risk management, your trade management. So, do you have a break-even rule? Do you have a trailing stop-loss rule? Do you take partials? You want to define these things before you are trading, and that should be your plan. So then you want to know if you did follow that plan or you did something differently that trade. Now, moving on, we have risk and money management. So you want to be consistent as much as you can with your strategy, and this includes how much you're risking per trade, because your strategy might be profitable, but if you're constantly changing your risk, for example, you trade 1%, you take a loss, and then on the next trade, you reduce the risk to 0.5. When you make the recovery, you're just going to be at break even instead of in profit because you change the consistency of your risk. So you want to make a concrete rule and keep track of if it's sticking to the same risk per trade, and this includes your TP as well, so your risk to reward ratio. Are you taking a fixed TP at 2% every trade, or do you sometimes take less or more? It's good to track this as well, so that over a period of trades you can look at what is the safest TP or the average TP that you're usually hitting. And in this section, it's good to note any adjustments that you made during the trade. So for example, again, did you go to break even or take partials? That's going to affect your risk to reward ratio. So the next section is outcome, and this is really important to you personally because this is going to tell you your overall performance. Most of the other data is based on the strategy itself, but in this part you can see how closely you're performing in comparison to your strategy. So you want to make note of your final result. Was it a win? Was it a loss? How much did you make on that trade? Did the trade hit SL or TP? And most importantly, you want to write why. So for example, maybe you changed your rule and you weren't feeling so confident that day, so you closed it early. So maybe it is a win on paper, but overall it's going to affect your performance because you took less than you should have. So this is good because, again, over a series of trades, you can look back and see overall how many winners, how many losers you had, so you can determine your personal win rate and your personal average gain or loss on a trade. Now, this is the part most people leave out of their trading journal, but this is probably the most effective for those of you that actually want to improve in your trading, and this is the reflection part. So everything else previously is based on data, but we all know the biggest factor that actually impacts our trading is our emotions, so it's good to make note of these as well. The reason I encourage this is because there's this very wrong mindset in the trading industry that you should eliminate your emotions. But don't forget, that's the definition of a psychopath. We don't want to be psychos, we want to be humans. And as humans, we have emotions. So as a trader, it's impossible to eliminate your emotions. But what you want to do is learn to handle your emotions better. So after each trade, you want to reflect on your emotions before the trade, during the trade, and after. So before the trade, when you did your analysis, were you confident to enter the trade or were you hesitant? Was there something that was holding you back? How did you feel during the trade? Were you nervous? Did you go into drawdown and start to feel anxious? How do you feel after the trade? So now you know the result. If it was a winner or a loser. Were you happy? Were you angry? What did you feel? It's good to note all of these things down because then you'll be more aware of your feelings. You'll be more aware that you get frustrated or disappointed after a losing trade. So then you can set rules for yourself that if you take a loss on that day, you're not going to take any more trades because you're more likely to take a revenge trade or FOMO trade or risk too much. So you want to make note of these things. You can also include some key things that you experienced during the day. For example, maybe you had a fight with your partner, or you had a hard day at work, or the kids were being annoying. All these things are going to affect your emotions as well. It's not just the trade itself. So those emotions might indirectly make you trade differently. And finally, we have the most important element, which is the final evaluation. So it's good to do this evaluation after every single trade while it's still fresh, and then it will be the most effective. So first point is, what could you have done better? So this is when you can look at your trade with the benefit of hindsight. So for example, maybe you did follow all the items of your checklist and you followed all your rules and you did everything right, but the trade still worked crazily through your SL. Well, then you can go back and see, oh, maybe there was news that came out during your trade, and then you have that bit of hindsight that, oh, okay, next time I'm going to check if there's news so I can maybe change my risk management in those situations. Maybe your trade was running really well and you were 5% into profit, and then it reversed and went to your break even. So then you can look back on all your trades and think, oh, okay, most of the time it goes to 5%. So maybe I can start trailing my stop loss to 2% or 3%. That way you can lock in your profits instead of giving them all back. And lastly, this is the part where you really have to be honest with yourself. Would you take this trade again or avoid it in the future, and why? So this is looking back at the rules of your strategy and then the final performance. Maybe you did change something about your rules that day, like you decided to trail or break even, but maybe it worked out well for you. So maybe that's something you can add to your strategy for the future. Or maybe you followed everything and it worked out perfectly fine, and you would continue to take the trade exactly like you did and keep that consistency. So these were all the essential elements that you should be keeping in your trading journal. Don't forget to look back at your performance on a weekly or monthly basis, because there's no point collecting all of this if you never use it. You want to evaluate and see what is working well for you and what is not. And this is where the optimization part comes in, because then you can see, for example, which pairs are you most profitable, which days are more profitable for you. Maybe Mondays or Fridays are less profitable, so you can just skip those days. What's your average risk to reward? What's your average win rate? You can use these things to further optimize the strategy, because maybe you can risk more, you can risk less, and then that helps you deal with your emotions better. All these things are interlinked. But yeah, I hope that gives you some better direction and guidance on how you can start improving your strategy or your overall performance. Feel free to share your journal with me in the server, and I can go through your data and help you optimize your strategy or your performance and give you tips on where your weaknesses are or what is working well for you. I'd love to help you guys. Because a lot of you, like I said, you just ask me how to help you improve, but I know nothing about you. So if you come to me with some data that I can actually analyze and see your performance, then I can help you guys out as well. So don't be shy. You can ask any questions in the server, and I'll see you in the next video.